Two overlooked stories, two undervalued stocks, and it's Apple versus Google Day. Investor Beat starts now. Thanks for watching. I'm Rex Moore, sitting in for Chris Hill. They are two of the greatest companies in the world, Apple and Google, and today on a special Investor Beat edition, we break it down and tell you which has the upper hand. Joining me in studio today, Jason Moser, Charlie Travers. Gentlemen, we're talking Apple and Google today. Both are known as innovators, visionary. They're hugely important to our modern economy. Both stocks have been long-term winners. And although Apple is still the more valuable company, $430 billion in market cap to Google's $270 billion, the market has punished Apple over the last year or so. So today we're really looking at challenges and opportunities for both companies. And Charlie, I want to start with you and Apple. As we look at that one-year Apple chart, Apple does have some challenges ahead of it.
I would place the biggest challenge as the shortening smartphone cycle. They have very capable competitors out there, most notably Samsung, who has its Galaxy S4 coming out very shortly. Apple cannot stop innovating and risk losing its position as the premier smartphone brand. So when I expect they announce the next version of the iPhone later this year, they'll come out with a strong product. I have no doubt about that, but they can never stop. They have to do this every year.
Which is tough to do. What about their opportunities?
I think the market's really underestimating the long-term potential for the iPad. They sold 58 million units last year. If you compare that to global PC sales, which are over 300 million, I think the iPad has a long room to run.
Okay, now, Jason, you're going to be our Google guy today. What kind of challenges is Google looking at?
Yeah, so I think that one of the biggest challenges Google has today, really, and it's also one of its opportunities to a degree, but because that Android platform is widespread among so many devices and so many different device makers, they do risk sort of becoming a little bit more unidentifiable because they all kind of, all these, whether it's Amazon or Samsung, they get Android, then they kind of tweak it to make it their own. So I do believe that they run a risk if consumers start really not identifying Android so much as really the primary nature of the platform there. So if Google kind of loses their identity there, they can certainly face some declining market share concerns there over the coming years. But that's the nature of the beast there. They have such a wide amount of share out there now with all these devices.
So many devices. Updates don't roll out evenly across all devices. You may have different versions and what have you, so that's what you're talking about. Okay, give us some opportunities for the big G.
Yeah, and I think just that's it. The general opportunity is because there are so many devices that are still coming online there. We're just in the very beginning stages with phones, and like Charlie even mentioned with the iPad opportunity, and I think that opportunity spreads out also to tablets in general. And we look at global mobile traffic today, that's 13% of all internet traffic, and that's up from about 4% in 2010, and that continues to grow. And Google and their Android platform is a big part of that growth, and so that to me really shows a terrific opportunity for a very scalable business in just a very growing industry.
Okay, let me put you on the spot with one more question each. Which stock do you like most over the next 5 years? Who wants to go first?
Well, I'll go first.
Go ahead.
Apple, it's like American is apple pie, right? No, I think the stock's been hammered unnecessarily. I think it's a great buy here.
Okay, Jason?
Yeah, I mean, let's be clear here. I mean, this is like, do I take the beautiful blonde to the prom or the beautiful brunette to the prom? I mean, it's not like you're really a loser either way, I think. And if you buy both stocks and hang on to them, you're pretty good. But I'm going to take Google here, just because I do think Apple does face some concerns there with the phone replacement cycle. They definitely have to iterate more on the device side, and I like Google's scalable nature with the Android platform there, so I'll go Google.
Good deal. Now, amidst some of the recent good economic news we've had, the Cyprus bailout, these are big stories, but today we're looking for some overlooked stories that investors should be paying attention to but aren't. Jason, we'll turn to you first. What do you have for us?
Yeah, this is definitely overlooked, and probably for a decent enough reason. The American Society of Civil Engineers puts out every 4 years they put out a report card grading our nation's infrastructure, and certainly it's a self-serving report to a degree. They can give these segments of our infrastructure bad grades, and then maybe you get a little business out of it. But with that said, I mean, this is just a litany of D minuses and C minuses. And so from levees to our water quality, it all really looks pretty bad. And I think it's at least worth noting. And I think if you are in any kind of a metropolitan area, DC here, for example, we hear a lot of complaints about the metro system, I think is one good example there. Save for the solid waste segment, which they gave a B minus. I think that's due to our 38% recycling rate, which I think will continue to grow. I think as more awareness comes online for people recycling. But it's definitely something to keep in mind. I mean, I think that we could certainly use some upgrades to our infrastructure.
Well, a lot of people say DC is very good at solid waste, right? Okay. Charlie, what about you? Overlooked stories here.
T-Mobile's shaking up how handsets are sold in the United States. Usually you pay $199 or $299 for your premium handset, and the carrier absorbs the rest of the cost. Like an iPhone costs them $600. The consumer never sees that in their bill. T-Mobile's going to bring transparency to that market with the iPhone 5, which they're going to start selling in April. So a consumer will pay $99, which is a lower upfront cost for them, and then $20 a month until it's paid off. There's no contract, unlike carriers like AT&T and Verizon would try and lock you up for 2 years. I think it's a more consumer-friendly approach, and we'll see if it gets some traction.
All right, that sounds interesting. Now we'll just shift gears very slightly. We've seen the overlooked stories. What about one undervalued stock for each of you? Charlie, we'll start with you.
So Jason talked Google earlier, and search is a winner-take-all business wherever you've seen that around the world. I think the Chinese internet search leader Baidu is very undervalued at current prices. Definitely a buy.
Okay, Jason.
Yeah, one that's not actually a winner-take-all business is Coach. You know, they're in that sort of higher-end retail space, and I think concerns with competition out there, along with some leadership changes coming up, they're valid. But we're still looking at a business here that's just done a tremendous job. They maintain a very high margin structure thanks to their direct-to-consumer nature of their business, and you know, management has just done such a great job over the course of time in returning value to shareholders in the form of dividends and also share buybacks. Over the past 5 years alone, they brought that outstanding share count down 17%. So really, for me, this is a company that is trading right now at less than 14 times projected estimates here. It's just way too cheap for such a quality company. I own shares personally, and I think it's a great opportunity for investors today.
All right, thanks, guys. Great information. For Charlie Travers and Jason Moser, I'm Rex Moore. Thanks for watching. Now, we're off tomorrow and Good Friday, so we will see you again next week.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. Don't buy or sell stocks based solely on what you hear.